All right. I think we are at 6:35. Let us begin. My name is Dwayne Lawson Brown. It is my pleasure to welcome you to this session of our, I'm sorry, I have to admit someone else. Uh, it is my pleasure to welcome you to this session of our Business of the Arts series titled Tax considerations for artists. As you already know, this is a very busy season, both artistically, creatively, and logistically. A time that we need to do a lot of accounting and following up on where our records are so that we can make sure that we can continue to be the creative folk that we are. And so I also understand that there are some things that are in flux right now, some information and things that are concerning our DC tax laws and potential changes. These considerations are being shared today. They're meant to be a suggestion to take into consideration in the case that changes do not take place. It's better to be prepared for the earliest deadline rather than being caught off guard if these changes do come through. As of right now, we do not have the answers uh, on if these changes will take place, but we'd rather be prepared in the now than be caught off guard. And so, with that, I have the pleasure of introducing our facilitator for today. Um, Farrell Parker is a DC-based performing artist and owner of Artist Tax Prep, an income tax preparation firm by artists for artists, founded in 2018 to help eliminate the shame and panic many experience as part of the annual income tax filing process. Now serving hundreds of clients nationwide. Originally from New Jersey, Farrell holds a bachelor's degree in business administration from Boston University and an MFA in classical acting from the Shakespeare Theater Academy at George Washington University. As a performer, she has been seen at the Kennedy Center, Arena Stage, Woolly Mammoth Theater Company, Olney Theater, the Huntington Theater, and on stage with The Second City, among others. Over the course of her career, Farrell has originated roles in 12 world premiere productions and produced a plethora of live comedy and musical events. It is my pleasure to introduce an artist that will walk us through some tax considerations that folks may want to take into consideration. Welcome, Farrell Parker.
Thanks, Dwayne. Hi, everyone. Thank you so much for being here to talk about everyone's favorite topic, taxes. Um, we are going to talk about a lot of topics today. So I might talk pretty quickly, move through some stuff. A lot of this may be things you're familiar with, um, which is always good to hear again and again, in my opinion, especially with something that might not necessarily naturally stick in our brains, and some of it may be new information for you. Um, what you don't know about tax law is not your fault. The tax code is 3,000 pages long, the personal income tax code, and all we do is add to it. Um, there's never it only gets longer, is my point. So if it feels opaque and confusing, you're not alone. You're not crazy. Most of us don't learn income taxes in high school, even though we should. Um, and most of us are just getting the information where we can. So, I'm supposed to give you a disclaimer that this is not legal advice. This is not individual legal advice. This is for informational purposes only. Um, you may not have the bandwidth to do everything I suggest in this talk, and that is okay too. If you're working on getting better at tracking and dealing with your income taxes, choose one area, one new habit to try and implement. It doesn't have to be all or nothing. The IRS cannot put you in jail. Um, And that's true. And getting something wrong on your taxes is not the end of the world. I'm not advocating for trying to do that. I'm just letting you know that I don't want you to be so afraid of the IRS that you end up avoiding taxes, which is something that just can really bite you in the butt later down the line. Um, all right. I think a lot of people have put in the chat what their artistic practice is, but it would be helpful if you could put in the chat what your artistic practice is, just so I can tailor as we go through. I'm going to share my screen momentarily. Um, Lastly, this is very far from a sales pitch. I'll just tell you that Artist Tax Prep is we have a wait list for new clients because people always ask me this at the end. So if you are interested in working with Artist Tax Prep, you'll send us an email and we'll put you on the wait list. We are prioritizing DC area folks. Um, Period. Okay. We're going to talk about income taxes for DC artists. Um, Thank you if you've shared your practice in the chat. That's wonderful. I would also love to know how much do you know about taxes now? A, I feel confident in my knowledge. I want to confirm with a pro. B, I feel like I know nothing. C, I know a little, but it doesn't feel like enough. D, the information out there is confusing. Which one best describes you? Oh, okay. I'm seeing a lot of C, which makes a lot of sense. Great. So today's topics, we're going to do an overview of just general income tax.
Meeting is being recorded.
We'll talk about business income and taxation of self-employment, business expenses, record keeping, estimated taxes, myths and misconceptions, DC updates, damage control, filing options, and questions. As I said, it's a lot to get through. I will talk pretty fast and hopefully have time for questions at the end. You can also put them in the chat as we go, and I will. A lot of stuff does end up being covered, but I will check it at the end to make sure I haven't missed anything. What is income tax? Okay. Income tax is a compulsory, i.e., legally mandated contribution to government revenue. We have had income tax in this country not that much longer than 100 years. It is a percentage of income that is calculated using the income tax return or federal form 1040. And income is any money you receive that's not an outright gift. So that includes money you receive for goods and services, but also can include passive sources like investment accounts. Credits, adjustments, deductions, those can all reduce your income tax and or your taxable income. I just want to show you this is what a lot of people are doing the forms, through an online service, through something like TurboTax. This is what the 2 pages of the 1040 look like. That's already 36 lines. This is additional forms that someone with a pretty simple artist tax return might have to do. So that is why it is and does feel complicated, because we end up having a lot more forms. Okay, examples of taxable income. On your W-2, you'll see wages, salary, employee benefits. 1099 non-employee compensation is for freelance independent contractor work. Um, Online sales, you'll see 1099K. You might see a 1099K if you're on Etsy, PayPal, Patreon. Royalties, as well as grants, sometimes fellowships, sometimes awards, those might be reported on a 1099 miscellaneous. Sometimes grants, fellowships, and awards are reported on the 1099 non-employee compensation, the 1099 NEC. And I'll talk more about the difference between those later on. Interest, dividends, capital gains. Crypto trades, investment accounts, those are all reported on various 1099s. And unemployment also on a 1099-G for government income. Also, gambling. Yes, fantasy football winnings are taxable. Hobby income, certain lawsuits, Social Security, depending on your situation, retirement distributions, and even jury duty are examples of taxable income. What is filing status? Filing status is a category that defines the way you're taxed, including the standard deduction amount. Single, married filing jointly, married filing separately, head of household, qualifying surviving spouse. Those are the current filing statuses available. Married filing separately is typically the least beneficial, especially for those with moderate and low incomes. And head of household and qualifying surviving spouse both require a dependent. Your spouse can never be your dependent. And probably neither can your pet, but sometimes people ask. You may have heard about the standard deduction. What is the standard deduction? The standard deduction is the amount of income that the government says everyone gets tax-free. It is set for the year, but it's regularly adjusted for inflation. So if you are a single individual filer, your standard deduction amount on the federal tax return is going to be $15,750. That means the first $15,750 of your income is taxed at 0%. What is the itemized deduction? If you take one thing away from today, let it be that itemized deduction is not the same as business expenses. I will keep talking about this, but this is something that I find to be a common misconception that if you have business expenses, that means you're itemizing your deductions, and that's not true on the federal tax return. Typically, you'll only use the itemized deduction with exceptions if it exceeds your standard deduction. Currently, 90% of people take the standard deduction under this current tax law. There's no dollar limit to the itemized deductions, but it includes things like state and local taxes, mortgage interest, medical expenses over a certain threshold of your income, gambling losses up to the amount of gambling wins, and charitable contributions. Most of the artists that I work with who itemize their deductions are people who own homes because the mortgage interest ends up being a big part of that itemized deduction. And state and local taxes, those will creep up if your income is higher. So if you're at a higher income bracket, you might be eligible to itemize. With the medical deduction, it's usually something like IVF that's getting over that threshold. So it has to be significant. Tax brackets or marginal tax rates. So a lot of people, I think, misunderstand what a tax bracket is. Um, it doesn't mean I'm in the 22% tax bracket. That means all my income is being taxed at 22%. No, it's just the dollars above 48,476 that are being taxed at that amount. So, after the standard deduction, $0 to $11,925 is taxed at 10%. The next 30 some thousand is taxed at 12%, and so on. It's not the simple equation that we might think. It's not just a simple math equation. It is simple math equation ultimately, but it has more parts than we think about. So that's just a little bit of info about tax brackets or marginal tax rate. I think this is kind of hard to get, so don't worry if it doesn't make sense to you right away. Okay. Credits and deductions are both examples of things that can reduce your tax or taxable income. So credits directly impact the tax. Credits can be refundable or non-refundable. Refundable means that you could get more from the tax credit than you put in as taxes. Non-refundable means that you can only get as much of the credit as you owe in taxes back. So a refundable credit essentially does mean the government is paying you, and non-refundable means it's just reducing your tax. Credits might be related to earned income, having children, education, retirement credits, and the expiring currently environmental credits. Those are just some examples. Deductions impact your taxable income. So they reduce the income number. They're subtracted from your total income for the year. And some deductions include business expenses, educator expenses, certain retirement contributions, which are called tax favorable, and student loan interest paid. Those are some examples of deductions on the tax return. All right. So, a lot of us as artists have a mix of different types of income, W-2 and 1099. For us, this makes sense. We are pursuing work in whatever sort of form it comes to us. We don't care, right? Unfortunately, the government does. The IRS considers employee income and self-employed income completely different. They are taxed differently and they need to be kept in separate buckets in order to make sense for them. Um, once we are self-employed, the IRS is treating us as a business. There are benefits to this, but only if we know how to use them, only if we know the rules. So I'm going to talk more about that for sure so that you guys can benefit from how the government is treating that 1099 income. So if you're an employee, you will receive Form W-2 at the end of the year. You will have filled out a W-4 that determines the withholding, the tax withholding. The IRS, our federal income tax system is a pay-as-you-go system, which is why we have withholding on the W-2 form. Your employer withholds income tax for you and makes Medicare and Social Security contributions for you. Under current tax law, there are no employee expenses allowed for most people. So, you cannot deduct expenses that your employer, if you're on a W-2, did not reimburse you for. On the other hand, we have self-employment income. Self-employment income is freelance income, independent contractor, sole proprietor. If you're a single member LLC, you're also self-employed. Those are different ways you might hear that income called. When you are going to get paid on a 1099, you will fill out a W-9 with that contractor, or maybe nothing at all. That's still self-employment income, even if they don't have you fill out a form. Um, with the self-employment income, you are entitled to business expense deductions. If you're self-employed and you have a profit on that self-employment business, you cover income tax and you cover the employer tax. The employer tax is the Medicare and Social Security. Um, that is why self-employment tax is so high because no one is taking care of that part of it for you. You have to do both of those taxes, self-employment tax and income tax, since you're your own employer. Where we report self-employment income on the tax return is called the Schedule C. And the Schedule C is profit or loss from business. You need to file a Schedule C if you receive at least $400 as an independent contractor or in exchange for goods and services throughout the year. You are a self-employed person if you carry on a trade or business as a sole proprietor or an independent contractor. You do not have to carry on regular full-time business activities, meaning it doesn't have to be a full-time business. It can be on the side to be self-employed. Having a part-time business in addition to your regular job or business may be self-employment. A trade or business is generally an activity defined as being carried on to make a profit. You don't actually need to make a profit to be in a trade or business as long as you have a profit motive. You do need to be making ongoing efforts to further the interests of your business to maintain that categorization. So, what do you need to have a business? You just need a profit motive and a record of your business activity and ongoing effort. That's what you need in terms of the IRS to have a business. I'm not speaking to um, the DC, any DC licensing that may be required for you and your type of business. Just from the IRS perspective, all you need is a profit motive, records of your activity, and ongoing effort to be treated as a business by the federal government. Best practices would be to have an employer identification number, which is a number that protects your social security number so that you can get paid and pay people under that number. And then a trade name, a business checking account that's separate from your personal bank account, certain types of insurance that might be required for your business, registration and permits. From a tax perspective, from a federal tax perspective, there is no benefit to an LLC from a strictly an income tax perspective. It's a state designation that has no impact on federal taxation. There are other reasons to file an LLC. It is a legal structure. Um, Certain government contracts may require you to. I cannot speak to those. I'm only speaking from an income tax perspective. But you do not need to have an LLC to be a business. And oftentimes I find that people form an LLC because it makes them feel like they're starting a business um, before they need to. And it can lead to more paperwork than is necessary, more paperwork, more filing fees, more work than you actually need when you're just starting out. Um, an LLC ultimately allows you to file as a different business structure as a corporation. And this is not something that I recommend until you are consistently taking in six figures annually from your self-employment or individual business. So I talked about this employer tax, this self-employment tax. The self-employment tax is only on profits from business. This means that you're not taxed on the expenses, but you do need to put them into the tax return. The self-employment tax is 15.3%, which is why you'll often hear that people who are self-employed need to set aside a quarter to a third of their income. Um, this is the main reason why it's important to know when you accept a job, how you'll be getting paid, because it should factor in to your rates. You need to be factoring in this tax to your rates, or you're not getting paid enough. This as I said, is Social Security and Medicare taxes that are typically covered by your employer. I think I have a slide on this later, but if you are entirely self-employed and you never pay self-employment tax, you don't have access to Social Security. So if you're curious about that, if you have enough Social Security credits to receive Social Security when you reach that age, you can go to ssa.gov and check how many credits you have paid into Social Security. That's just a separate tip. Okay, so self-employment tax. It's on your profits, as I mentioned, and your profit is your business income minus your business expenses. Profit times income tax rate plus profit times self-employment tax rate, that equals your total taxes on self-employment income. Using a simple example that won't ultimately reflect the numbers, because as you saw, there are so many forms and different calculations that go into the numbers. But however, let's just say you had $10,000 in income, $2,000 in business expenses, your profit is $8,000. Then this is what you're paying in tax from both the income tax rate and the self-employment tax rate combined. I'm making an assumption here that you'd be in the 12% tax bracket. As we already talked about, that number is variable, but I just want to give you an example of how this looks. Without those business expenses, your tax would be $2,730. So you're saving at least $500 in this example by deducting business expenses. What are business expenses? You'll often hear them called write-offs. Um, I feel like there is some scene in every sitcom about this topic, but I really like the Schitt's Creek explanation because it is most succinct. A write-off is a business expense used to reduce your taxable income. So, as I mentioned before, the standard or itemized deduction, everyone takes one or the other. The standard deduction amount is determined by your filing status. Many people don't qualify for itemized deductions. Business expenses are limited to you with business income and can essentially be any dollar amount. It is, in my opinion, always worth it. Um, you may, depending on your situation, every $5 may reduce your tax by $1. Every $20 in business expenses may reduce your tax by $1. It really depends on your situation, but it is always worth it. And also, the IRS says you have to report your business expenses as well. What is allowed as a Schedule C business expense? The IRS says that in order to be deductible, an expense needs to be ordinary and necessary. Ordinary means that other people in your field might have a similar expense, and necessary means that you made the expense in order to make a profit. The expense should not be lavish, but it does not need to be indispensable either. Um, when I say the word lavish, I am using IRS language here. Yes, taxes are numbers and they end up in real dollar amounts, but it is written as law and law is interpreted. So that is why, first of all, as I said, this isn't legal advice, but when you are working with different people, you might see different numbers. You might deduct certain business expenses based on what you think is reasonable versus someone else. That is okay. Examples of allowable write-offs include advertising, business travel, education, if it's to improve your skills in the same field, contract labor. Let's say you play a gig at a restaurant and you pay your band members out from the amount that the restaurant pays you, transportation and mileage, tax prep and legal fees related to your business, insurance related to the business, not your personal vehicle insurance and not your health insurance, research expenses, professional memberships, business meals. A business meal qualifies if you are actively doing business over the meal. It's not just, oh, I had to be over here, and so it was convenient for me to buy lunch out. That's not a business meal deduction. Um, Supplies, materials, and equipment, studio space, and postage. A conference attendance, yes, could qualify as a write-off. We want to be careful because these are common business expenses, um, but you want to be careful with cell phone and things like your cable and internet, as well as media subscriptions. Realistically, um, when we're talking about something like our cell phone, yes, we use it for business, but can you really say you would not have a cell phone? If you didn't have your business, probably not. So, what we want to do with these kinds of things that apply to both our personal life as well as our business world is make a determination of a percentage that we can take as a deduction. So, let's say I look at a month of my phone usage and I determine that, okay, 20% of the time I'm using my cell phone for business, for work, and I can deduct 20% of that cost. Um, Home office, we can talk about a little more, but home office can be a significant deduction. You have a home office if you have an area in your home. It does not need to be an entire room. An area in your home that you use regularly and exclusively for business. This should not be your dining room table. It can be a studio room, a closet where you're storing specifically your art supplies. It can be a desk portion of a room. Um, if you work from home on a W-2 job and you also use that space for business, I would not recommend writing that home office off as a deduction because the IRS says it needs to be exclusive use for your business. Um, Car payments, we can talk a little bit more about mileage. But if you want to deduct anything for your personal car, um, then you should be tracking the mileage, not just the actual dollar amount you're spending. You will not be able to get a deduction for your personal car without tracking your mileage. Mixed travel, travel really needs to be carefully tied to income generating activities. Um, a lot of those expenses can be suspicious to the IRS. And if you are um, traveling for business and pleasure, you want to be really careful about splitting up those expenses. Maintaining image, the IRS says you cannot deduct the cost of keeping up a professional appearance. Obviously, this gets a little tricky when we're getting into performing artists. Yes, if you're contractually obligated to change or maintain your appearance for a job, those expenses are deductible. But if it is something that generally overall improves your general appearance, it is not deductible as an expense. A gym membership, because it is for your overall health, according to the IRS, not deductible. Um, if you were training for a specific movie, maybe let's say a boxing movie, and you needed to get boxing coaching, those classes would be deductible as education. But just general fitness is not. There is a real example of an influencer who made the argument for deducting certain plastic surgery because it was detrimental to her health. So it really needs to be, you really need to prove ultimately, if you got audited, you would be needing to prove that it wasn't for your general well-being or health. Commuting to W-2 work is never deductible under current tax law. And neither are moving expenses, even if it's for work. Gifts are deductible as part of your business, but there's a limit to $25 per person per year. Um, and I also want to caution that we be careful with timeline. Um, if you are doing something like let's say you're crowdfunding or you receive a grant at the end of the year, that income, we are on a calendar-based system. So unless you switch your accounting period, which is a pain to do, most of us are going to be on the 12-month calendar tax system. If you, let's say you do a fundraiser, a Kickstarter for 10 grand for a project in November that you're not going to be able to spend the money until February, that is going to hurt you a little bit because you're going to be taxed on the entire $10,000 and you won't be able to deduct the expenses until you actually make them in the next year. So I'm just cautioning that. What proof do you need of your business expenses? Um, sorry. When you file your taxes, all you're putting in is numbers essentially on the Schedule C. There's lines, there's expense categories, you're filling in the number, and I'm going to show you some of those categories in a minute. But you are not going to be required to present any proof, typically even to a tax preparer, and certainly not to the IRS unless you are audited. You're also more likely to be audited by the state than by the federal government, just with current, I think, staff levels, etc. And also, the federal government often has bigger fish to fry. So, the proof that you'll need in the event of an audit that you need to provide proof is written record with dates, amounts, and business purposes, documentary evidence, aka receipts. Bank statements will not usually be enough. These records should be kept regularly. Do not wait until the end of the year, is my recommendation. Most people will not do that. Um, it's certainly best practice to track your income and expenses as you go. I also think it leads to forgetting how much you spent and not getting all of the deductions you should. If you're waiting till the end of the year to sort through receipts, you may forget why you made an expense. And you should hold on to records for 3 years, with the exception of long-term assets. So if you buy furniture or a piano or some kind of relevant equipment that has a longer life, you need to hold on to that receipt for as long as the equipment is around. Um, I definitely recommend having an email, a folder in your email, or even a separate email address just for your business receipts. Um, so that you just have that taken care of. Take the extra, most receipts you can get digitally now. Most of them are being sent digitally now. Take the extra minute at the square to put your email address in so that those are going to your email and you're not worried if you have a record for that. If you get a paper receipt, you can take a photo, email it to yourself, same thing. A business bank account, a separate business bank account is a good way to track A lot of people use QuickBooks Self-Employed or another app. I don't have recommendations for apps. What I will say is that those are used at your own risk because ultimately you are responsible for your tax return. Even if you're using TurboTax, the person that's on the line is you. You're the one that signs the return. And so a lot of times I think that people use some of these apps without enough information. And so things are miscategorized, they're put where they shouldn't be, and you don't know the difference. So I think having a little bit of information going into using those apps is great. If they're useful to you, that's amazing. But uh, get a sense of what they're actually doing. Um, we can use a cloud spreadsheet, and I'm going to share ours in a minute, or your own system.
Well, excuse me,
Yes.
Farrell. Before we get
Mhm.
too far away, I do want to ask, Salvador asks, would a painting area in your home work the same as a home office?
Yes, it would, Salvador. This deduction is based on square footage of the square footage of that area versus the square footage of your entire home. But it doesn't need to be a whole room, can definitely be a painting area. I know some people might be allergic to spreadsheets. I'm going to share the artist tax prep income and expense tracker for this calendar year 2026. Um, this is free to use. All you need to do is go to File and make a copy in order to actually be able to edit it in your own version. Um, but yeah, let me share the screen. I see some of you have gone in there. Again, this is like very analog, but I I guess I'm just an analog kind of guy. Um, I like to see the information more sparsely and clearly. So there's an index page. There's also a lot of tabs here. Um, Not everyone is going to need to use every single one of these tabs. They're here um, for people who need them for information. If it feels overwhelming to you, focus on the expenses tab. So the income sheet is pretty straightforward. The reason you want to track your income is because, again, if you got audited, you're being uh, counted against your records. Even if you get a 1099, it is your records that will ultimately validate that income, not just the 1099 that that company sent you. You may not get a 1099 um, that you thought you're going to get. You For example, like that, maybe that 1099 just got lost in the mail. You'd still want to know how much you made there so that you can report that income. You can file the return without those 1099s. You always need the W-2s because they have withholding. You always need the actual forms to file. But if you are missing a 1099 by the time you want to file your taxes, it's not the end of the world, especially if you've been tracking yourself. Also, I will not go through all these, but these do have like copious notes, so that if you're looking at this later on and you can't remember what we talked about, it should give you more information here. So the income sheet, again, this is designed to act as record keeping in the event of an audit and to help prepare the taxes, whether you are working with a tax preparer or doing them yourself. Um, so the income sheet is date of work, the date you got paid, because as we know, those are typically different. The amount you got paid, who paid you, the payment type, so PayPal, Venmo, etc., direct deposit, etc., so that you can cross-check those records. A description of the job or sale, and then a tracking number. This is um, optional, but helpful if you invoice. I will say I'm not going to talk too much about inventory today. And the reason for that is if we are small businesses, and and the definition of a small business is in the millions of dollars. So we are all small. I'm going to assume we're all small businesses. And you are making art. You have the option to just deduct supply expenses. You don't have to keep track of inventory, but you also can keep track of inventory if you're someone who sells physical items, and you probably want to, if you are selling, for example, at different locations, especially. So I'm not going to talk too much about that, but if you have um, questions, I'm happy to look into them. Expenses. All right. You'll want to track the date of the expense, the category. This drop-down menu is based on the Schedule C. Um, if you don't know what category to put an expense in, you can go over here and check out examples of what you might find in those categories. These are not going to be 100% comprehensive, they're just examples. But if you're not sure, um, you can always go back to that concept of ordinary and necessary. Was this expense ordinary, necessary, helpful, not lavish? Likely deductible. Um, with exceptions, because there's always exceptions. The amount, you can include the sales tax. You don't need to worry about parsing that out. Who you paid, a description, just because we want to know why you made the expense ultimately if you got audited, and type of expense. This again is for if you're someone who has mixed income, you get both W-2 and 1099. Maybe you're a teaching artist, and a lot of your expenses might be applicable to both kinds of income. That's what this category is for. So you'll mark if the expense was for self-employment, for W-2, or for general operating, which I take to mean as the expense applies to both kinds of income. I said W-2 income is or sorry, expenses related to W-2 income is non-deductible. It's true. I just offer this as if you are someone who wants to track everything together because you have that mixed income. I'll come back to estimated taxes. Um, so I already said for deducting expenses for your personal vehicle, you absolutely can. Um, you need to track your mileage. You need to know the mileage on your car at the beginning of the year and the end of the year. There are some online apps that people like for this. That's not a bad idea because these are pretty straightforward and easy to use. Um, you'll want to be tracking the date of the trip, the destination, the business purpose, and the number of miles. The expenses amount and the type of expense. This category is if you are taking what's called actual expenses for your car. Um, Most people will want to take the standard mileage deduction, which rolls in, which is a rate per mile that the IRS has determined is deductible, rolling in all these different expenses. I think for 2025, it's 70 cents per mile. And it usually works out pretty well, in my opinion, to do the standard mileage rate. In the first year of owning a new car, if you ever want to do the standard mileage rate, you have to do it the first year. This chart is also just an example of what kind of mileage is deductible that you can reference if you have questions about that. We talked about the home office. This is something you can be tracking throughout the year, but is less necessary to do so. So this is just a chart that shows the different categories that might go into this deduction, and it's based again on the square footage of your home versus the square footage of just the home office. This can also be detached. I don't think I said that, so it could be a garage space as well. Equipment. A lot of the current tax law means that most equipment is going to be 100% deductible in the first year you use it. When possible, if it's not going to be detrimental to the taxpayer, I will avoid depreciation just because it can be complicated and unnecessary. However, you may want to spread the cost of equipment over several years, or you may be required to do so. So this is equipment would be Definitely not anything under $500, but any larger expense for something that has a longer life would be equipment. So I've included this for those larger purchases. There is a travel log as well. And uh, the reason I've included this is because there is an option for us, if we're traveling for business, to use a per diem rate for meals, and that's set by the government. So that's why this tab is here. And you may also want to be tracking your health and retirement contributions. Health insurance is not deductible as a business expense. However, if you pay for your own insurance, for example, if you use marketplace health insurance, the actual amount you pay may be deductible as a self-employed health insurance deduction if you have a profit. Okay, let me go back to our PowerPoint. I'm reading Mandira's question. If I have two other partners in my LLC, but they are not taking income or profit, how do I file in DC-based LLC? Let's talk later. Um, you need a business filer. You need a tax person to file your business taxes. Or you can, but yeah, those are business taxes and they're not on the personal income tax return if you're actually in a legal partnership, which it sounds like you are. So other deductions available to Schedule C business filers include an adjustment for one half of self-employment tax. So you will get a deduction on your income if you pay self-employment tax. The QBIA is the Qualified Business Income Adjustment, and this is an adjustment for 20% of your profits. These will be automatically calculated on your tax return. I'm just sharing them so you know sort of what's going into it. We talked about the self-employed health insurance deduction. There is a specific self-employed IRA that is tax beneficial. Um, and there are certain state-specific deductions. Um, I think everyone here is a DC artist, but Maryland has specific deductions for artists, and I'll talk about some more specific DC credits. Everyone's favorite estimated taxes. You must make estimated tax payments if you expect to owe over $1,000 in taxes to avoid penalties and interest. You do not need to file quarterly, you just need to pay them. You may also need to make estimated tax payments to your state. The DC threshold is actually only $100. So essentially, if you owed the IRS $1,000 last year, or more, they're going to say, you knew you were going to owe that. So this year, we're going to charge you interest and penalties for underpaying. And that's because, again, this is a pay as you go system. I'm going to go back real quick to the spreadsheet just to show you the estimated tax page. Um, Again, yes, you can calculate your entire tax return 4 times a year. I really don't recommend it. I just think it's a lot more work than you need to do when all you need to do is pay them. You can avoid penalties by paying 110% of what you owed last year. You can also calculate based on your actual intake of income, and this tab is designed for you to do that. If you have questions about estimated taxes, um, this short video that's linked here is very concise. I don't find a lot of IRS content to be helpful, but this one is, especially if you're trying to understand estimated taxes. Um, and as I said, if you owe $100 one year to DC, the next year they're going to say, you knew that, so we'll start charging you interest and underpayment penalties. Um, Okay. I pay every month just because it's easy for me to do, but the dates are quarterly. And that's what's required. And by required, I mean that's how they're calculating interest and penalties. Okay, back to this. Okay, let's talk about some common misconceptions. We already talked about expense deductions, so I don't have enough expenses to deduct. If you have any business expenses, yes, you do. Um, I didn't receive a 1099, so I don't need to report the income. I'm required to tell you that any income you receive should be reported to the IRS. Um, People think the IRS will audit you and count your business as a hobby if you don't show a profit in 3 out of 5 years. So um, this is one litmus test the IRS might use when they're looking at if your business is a hobby or a business. What happens if the IRS or your state says, actually, we think this is a hobby and not a business, is that they will disallow those business expenses and you'll be required to pay income tax on the entire gross income and not just the profits. Where this can be a problem, it's not a problem just to take a loss for your business. Most large companies, Uber, for example, I think took a loss for a decade. It's even considered a great business strategy. However, the IRS will be suspicious if every year you're making $85,000 on a W-2 and deducting $20,000 in business expenses with no profit to show for it. It's going to look like you're just trying to get out of paying your taxes. So that's where I recommend being careful with that. I especially, again, will caution being careful with travel expenses because a really, really high number in that category can look suspicious. If I file an extension, I don't have to wait to pay until October. This is not true. If you file an extension gives you, is a form you file, you can do it online. It gives you 6 months additional to file your return without a late filing fee. However, it does not give you more time to pay. Why is that? Because it's a pay-as-you-go system. So even if you file an extension, you are still accruing interest and penalties in that 6 months. If you are due a refund, they don't care. You don't have to file an extension at all if you are due a refund. Um, Important to know if you're behind on your taxes, you only have 3 years to collect a refund. After that, it's theirs. Um, Common misconception. It's best to try to avoid paying self-employment tax. I touched on this briefly in terms of contributing to Social Security and Medicare. That might be a reason that you want to make sure you are showing your income, showing your profit outside from it being outside from the legality. That's a way that it's benefiting you. Another way is if you're someone who ever wants to apply for housing or apply for a business loan. It's really important that you're able to show that you have income. 1099 non-employee compensation versus 1099 miscellaneous or other income. I'm sharing this because sometimes the DC Commission will issue the grant paperwork as a 1099 NEC, and sometimes they'll issue it as a 1099 miscellaneous. I don't know what determines this necessarily on their end, but I just wanted to clarify again that 1099 non-employee compensation is business, self-employment, or independent contractor income that you receive in exchange for services. And the miscellaneous or other income might include grant prize money for which you did not perform any specific services or any specific active services in exchange for that income, which is why royalties are also included on the 1099 miscellaneous, as well as sometimes rental income. All right. DC and updated specifics. If you are low to moderate income, you may be, and you live in the district for the entire year and you pay rent or own a home, and you pay rent on a property that pays property tax, or you pay rent or you pay direct property tax for your home, you may be eligible for the Schedule H property tax credit. This can end up getting you $1,200 back, depending on your income. So don't sleep on the property tax credit in DC if you are a DC resident. Again, this is income based, but a lot of people don't necessarily know about it. Um, Dwayne touched on this at the beginning. We're currently experiencing, DC is currently experiencing some confusion on the tax side around whether or not we will have to follow the current federal government administration's rules on our tax code. Pretty unprecedented situation. Um, DC wants to keep their tax code separate, called we're calling this decoupling. So, you know, this administration passed the one big beautiful tax bill, and DC decided that, okay, we are not going to follow those new updates for this year. Currently, the federal government is trying to force DC to follow those. So I don't know what will happen with that yet. Um, Mostly people are just recommending to go ahead and fill out your DC return and file it as normal since we don't have any information. In the past, um, DC, like with unemployment during COVID, DC has updated those numbers for filers who already filed once the law changed. Laws changing during tax season is not unheard of, especially since 2020, but this situation specifically is. So, and given the contention between DC and the federal government, I'm even more unsure of how this will work. So, um, I think going ahead and filing your taxes, especially if you're due a refund before this thing maybe slows down what we're doing. I don't think there's anything to panic about. Truly, a lot of this will not impact individuals that much, but I would go ahead and file as normal. Um, Currently, there is an exclusion for tips and overtime. Um, I believe it's $12,500 deduction for tips, which just must be in a specified service industry. So anything where you normally receive tips, those tips can be deducted on, it's called Schedule 1A. And the same goes for qualified overtime income. That's an exclusion from income that's available this year. I actually don't know how long that will be available, but it definitely is this year on the federal tax side. So, if you had tips and or overtime, make sure you are um, noting those on your taxes. Um, and the other thing is the D30. D30 is the business filing that you may be required to do if you have a business that is outside the DC income tax return. You are required to file a D30 if you bring in $12,000 or more in income as self-employment from DC. The exception to this is if 80% of your business is personal services provided specifically by you. Most artists, in my opinion, qualify to be excluded from filing the D30 based on 80% of what they're doing is work that they themselves are performing. There's not rent, there's not capital-based activity. They're not paying several other people who are giving them commission. Um, it's hard to find guidance on this. I've just seen most like granting organizations, even government organizations, people who give you a form will tell you that they cannot provide legal advice to avoid getting themselves involved on your tax return. If you are researching tax law, you have a question and you want to research it online, I suggest always adding on the federal side, adding IRS to your search terms so that you're getting the information directly from the source. The source is really the tax code, but very few people are reading that, and the IRS guidance is also going to be able to be used as guidance. The reason is because there's just a lot of misinformation online. A lot of, as I said, like the tax law changes every single year. There's a lot of out of date stuff. So add IRS to your search terms, check the dates. In terms of locally, DC, DC has a lot of small business resources available. Um, and you can actually call someone and talk to someone about your questions and also make an appointment. Um, you may not always find everything you need, but in terms of like state and local taxation, do not underestimate picking up the phone in these cases because you're likely to get the answer you're looking for a lot faster that way. Okay. Things you might feel like you're in trouble with the IRS about. Um, you never filed. I recommend doing so. Um, Sometimes the IRS might not come for those filings for years. But the best thing to do is start when you can. Start filing, go as far back as you are able. If you have an online IRS account, you're able to access, if you don't know where to start, you can start there and access what's called your transcripts. So you can see on the IRS website what information they have on you for those years, um, which can be a really helpful starting point. Let's say you had a lot of self-employment this year. You have a large tax bill you can't pay right away. Um, Pay what you can. There's an option to set up an online payment plan. If you have trouble setting up a payment plan, um, you can sort of design your own and just pay monthly. Paying what you can as on time as you can is going to be the best way to avoid problems in the future with the IRS, and it gives them the assurance that you're serious about repayment. Um, if you didn't pay enough, as we talked about, you may be subject to penalties and interest. Interest, they're always going to charge you. Um, but penalties, if you are up to date on your filings and you have penalties for the first time, you can call and ask for a first time abatement. Um, and that will be only available for 1 year to you, but I think probably is underused. It is really unlikely that the IRS will remove your tax debt. You have to prove severe financial hardship in order for that to happen. Um, I'm going to look at these two questions. If you're paying contractors, yes. If you are paying contractors um, for your art, asking them for a W-9 at the start is absolutely best practice. Um, if you were out of the country and did not file for those 3 years, if you are a US resident, you are taxed on your global income. Um, that a lot of that income that you made while you were out of the country may not be traceable. However, you should file a US tax return based on the income you did earn. Um, there's a lot of rules about residency, but generally, US residents are taxed on worldwide income. Um, a federally declared disaster. This is, I don't think, super relevant for this year. It was very relevant for the LA fires. Sometimes um, this will extend the filing based on your location. I think the Texas floods, the LA fires, those all extended people's time to file and pay. But I'm not thinking of major ones that would impact us this year. If you are in a federally declared disaster, distaster, sorry for the typo, you um, may have access to certain losses that you would not have access to otherwise. Finally, um, the Taxpayer Advocate Service is just that. This is an organization that interfaces with taxpayers and the IRS if you have an issue that you can't resolve. And it's also a great resource. There are also, I think, Washington Area Lawyers for the Arts is the name of that organization. There are usually somewhere, somehow, some pro bono legal advice available to you as artists. There are organizations that focus on this. If you get a letter from the IRS, please read the letter. That's the first thing you should do. Don't ignore it. Um, the anxiety I know of not knowing can be preferable to the anxiety of knowing what you have to pay or what to do. But these problems do not go away once they've sent you a letter. Sometimes the letter might just be an identity check, and it's the only way for you to get your refund. The IRS will only ever contact you by letter.
Uh,
Okay. Yes.
well, real quick, would you repeat that? Because I feel like a lot of people do face scams
Yes.
regarding the IRS. So would you mind repeating that part again?
Yes, the IRS will only contact you by letter. They will not call you on the phone, ask you for your information, and they will not send you an email. They will send you a letter with instructions on what to do. There are also plenty of, honestly, I have seen scams of people impersonating the IRS in the mail as well. We're just in a day and age where a third of people at some point are going to experience some form of identity theft. Um, we're all, your tax pros, the IRS is doing, I'm not going to say their best. I don't know if I could say the IRS is doing their best, but um, this problem, in my opinion, is out of control. But it is a risk. So definitely, if you receive a letter from the IRS, you can check if it's legit by going into your online IRS account. You can also, the letters usually have codes on them. You can search that code because sometimes the scammers are not smart about that. But never give your um, social security number to someone who calls you for it. And that's my general rule of advice. Um, Options for filing. Everyone is entitled to free tax filing. You do not need ever to pay someone to file your taxes. Um, that doesn't mean you shouldn't or don't want to. It's just that that is the law. So you always have access to fillable forms on the IRS website. You can always um, print them, fill them out, mail them in. You can do them by hand. Um, One thing to note, one change this year that I didn't mention is that um, the government is basically saying we will not be issuing paper checks with very rare exceptions. So if you are due a refund and you do not give your direct deposit information, it's very unclear how long it will take for you to get a refund. Probably what will happen if you do that is the IRS will process your return and send you a letter asking for the banking information. If you don't give it to them again, maybe ultimately they will issue. I think you do have to have an exclusion reason, and they'll maybe issue you like an electronic debit card. But that's just something to note that they're really completely phase. They will eventually completely phase out paper checks. Is their plan. Okay, so DIY fillable forms, online interviews, which includes free file and paid options like TurboTax, TaxSlayer. Those sometimes are like the interview means that instead of you looking at the form and putting in numbers, they're asking you more narrative questions, and that's easier for some people to process. Um, there is there are free versions of TurboTax. I don't know what those limitations are, but the free file income limitation is around $79,000. There are volunteer run free options for people with income under around $65,000. These are limited. If you have a Schedule C, you cannot use these services and take a loss. This is called the Volunteer Income Tax Assistance Program. And myself and my two other preparers volunteer with this program. I am at Howard every Saturday morning, um, doing volunteer tax returns. And you can also check getyourrefund.org, which is the same income limit, but also free. And that one is easy to do on your phone if you are like purely a phone person without a computer. Getyourrefund.org is good for that if you meet the income limitation. And you can also hire a tax pro. Um, Tax pros should be searchable on the IRS website. Okay. Thank you for listening to me yap so much, and I know too fast about income taxes for DC artists. Um, Please let me know what questions you have. You can come off, I mean, you can raise your hand if you have any questions. And I'm also gonna put my email here in the chat. If you think of anything, um, that's not a math question, because I won't generally do specific math by email. But if you have a question that I can answer that you didn't get to ask today, I will really try my best to get to it by email. It's a very busy time of year, obviously. So if I don't respond right away, don't take it personally, but I will try to get to them. Um, there's a question about, as an LLC with three partners not making a profit or breaking even, do you need to hire a CPA? You need to be able to fill out the LLC filing forms. You don't necessarily need to hire a CPA, but you do need to fill out the LLC forms. Um, and the whatever the state requirements are for that LLC filing. A lot of those have annual fees. Okay, there's a question about grant income. If you don't spend the grant income in the same year you receive it, you cannot have it deducted from your income. That's the question. No. If you, what I'm trying to say is that if you take in grant income this year, but you don't spend the money until next year, you can't deduct the money until next year. You still can deduct the expense, but it won't be available to you as a deduction until next year, which means you'll be paying tax on the full grant amount this year. Whereas if you got the grant and deducted the expenses in the same year, you would only be paying tax on the profit. Does that make sense? They are able to be deducted in the next year. It just might hurt your tax liability. Um, and then Patty's asking, must you have income to be able to file? You can file a Schedule C before you start earning income, um, but you should be open for business. You can uh, deduct startup costs. There is a dollar limit to that, but there's a certain amount of startup costs you can deduct, and you absolutely can file a Schedule C before you start earning income, but you should be open for business. Do you file grant money in a special place for income? Typically, if you are a practicing artist, your grant income will go on the same place on the Schedule C. There is some leeway if the income is not in exchange for anything. So, again, this is not specific advice and it depends on the form you receive, but if you don't have to do anything for the grant, you're not exchanging any product, that may be able to be reported as other income as opposed to business income. But generally, if you're a practicing artist and you receive grants, fellowships as part of your practice, they should go on Schedule C. The other income categories, those are on Schedule 1. Um, Anything else? I see. If you don't have a receipt, will a credit card statement that shows the transaction be sufficient? Um, a credit card statement is not considered documentary evidence. It's not sufficient for an audit, um, but that doesn't mean you shouldn't deduct it if you made the expense. All right.
Well, my
What's
goodness.
considered what's considered lavish? You know, caviar at your business dinner. Just it's a definition that you get to define. But uh, if it seems excessive to you, I mean, it really is a definition of based on reasonableness, which is very hard to interpret, but that's like knowing that we get to interpret, I think is the point. Thanks, Dwayne.
Well, this has been a very, very informative presentation. Um, Farrell, if people are trying to reach out to you, would you mind saying your email as well, for those that may not be able to see the chat?
Yes, my email is Farrell, Farrell at artisttaxprep.com.
Indeed. And thank you again so much for this presentation. I learned a lot, and I feel like I learn a lot every year, but you know, I have
Yay.
to do better. So yes. Know that it is not just the folks in the audience that are learning in these sessions. So thank you again for attending Business of the Arts. We are planning our next few sessions, so please keep your eyes peeled for the newsletters that come out at the beginning of each month. And we want to hear from you. We have our current strategic plan survey that is circulating both through the newsletters, the emails that have been sent out, and via social media. So please complete the survey. We are hoping to get your feedback so that we can show up and provide service the best way that we can and build the commission that you want, need, and deserve. So thank you for your time, your service, and your artistry. Take care and be well. Good night.